Hey everybody, Chuck Barone. Friday, January the 5th, 2024. Let's close out this first week of the new year. Crazy week, signaling more crazy to come. Next week should really be wild. We're going to get CPI. We're going to get some numbers next week that are going to be meaningful, as we did today. Things are straightening out, it looks like, in this crazy, zany world. At least one step at a time. We'll see if we can continue to take the steps forward or we're going to end up going backwards, which we typically do. Anyway, before I get rolling here, let me take a half a second. Welcome everybody to the show. And as always, thank you guys for your support. We appreciate you guys watching these videos, hanging with us every day, hitting me up with their questions and comments. We appreciate that very much. Your support means the world to us, guys. All right, let's talk about markets today. Well, we knew we were expecting this big jobs number today. It came in pretty high, significantly higher than they were expecting, which then market was on a pretty good tear, now went crazy, reverse course, ended up finishing in the positive, but barely eking out gains. We'll go over those numbers. The bond market, well, it had a weird day too. Everything looks just so strange right now. Because it's also, what happens is everybody anticipates the data, like today's jobs data. So they place their bets. Usually the market rallies because everybody's super bullish. They get the data. It's not exactly what we were hoping for. The market kind of tumults around, digests that. And then the next thing you know, it's right back on the positive thing. And it probably will be next week. They're really speculating now that the Fed has accomplished this soft landing. Janet Yellen today, actually came out and declared victory on a soft landing. They're pretending things are different than they really are. Now, I'm not saying a soft landing is not possible or we're going to have a recession or everything's terrible or anything even remotely close to that. I'm not saying that. What I'm saying is we still have inflation numbers that are significantly higher than what the Fed wants. We still have the cumulative effect of the inflation we've had for the past couple of years, which adds up to pretty significant price increases on stuff people use every day. And these are just the reality of things. So let's look at these markets. So today, the stock market, the Dow ekes out a gain, rising 25 points. Now sitting 37,466. You have the NASDAQ gaining 13 points today, now at 14,524. The S&P up 8 points, 4,697. So you can see a pretty big nothing burger for the markets today. I think it might get a little bit quiet. I'm sure we're going to have the speculators placing their bets and the people who have information that they can bet on. But I'm guessing next week's going to be the big one. We'll see where CPI comes in. If it's anywhere near their target, expect a big blast off, guys. I just have a feeling that it's not going to be, okay? Anyway, bond market today. So 10-year bond sells off, rises 6 basis points, now sitting at 4.05%. That's a pretty big climb from around 4.5%. And no real move by the Federal Reserve. This is just the bond market sorting things out on its own. And the 10-year back above 4%. The 2-year basically unchanged today, sitting at 4.39%. So now we're kind of compressing that inversion. I guess we kind of expected the 10-year to get back above 4%. It's just surprising how fast it did it. It was a big number. All right, anyway, dollar today. Not a big move today, up very small, more pennies. Now sitting at 102.45 on the index, a good, decent, strong number for the dollar. I think that the dollar, if the Fed moves to cut rates, the dollar will go down. It was just sitting recently when everybody was 100% convinced it was happening in March, sitting at around 100 on the index. Now there's a little more uncertainty. The dollar rallies back up almost 102.5. So we'll see how the dollar reacts to the reality if the Fed cuts rates and the reality if they don't. Precious metals today, gold and silver, are actually up in the face of a decent strong dollar. Gold rising at $1.70 per ounce, now sitting at $2,046.30 per ounce. While silver gains 19 cents an ounce, now sitting at $23.17. Decent numbers. I still would like to see silver above $25, and I believe we will. Gold, I think, is fairly priced right now, but probably with room to go, especially when the dollar comes back down. You're going to see gold and silver take off. Oil today, up $1.74 per barrel. Pretty nice gain for oil. Sitting at $73.93 for a barrel of West Texas Intermediate. So for us, this is just a routine day in oil. It's still in the trough we expect it to stay in, between 70 and 75. Again, I say there may be breakouts from time to time. It might break out. There's some new rumor about the Middle East, or the war gets bigger, or who knows what the hell, and it could spike up. It did late last year, up to almost $100 a barrel. And then it could be some stuff where it spikes down even under $70. But ultimately, it seems like that's where the equilibrium is, between $70 and $75 per barrel. Until anything really changes, that's where we expect it to stay. Bitcoin today, taking a little bit of a loss, down $590, sitting $43,957 per Bitcoin. Super strong price. I've been reading more and more about these ETFs, 14 different ETFs possible. I guess we're supposed to get a decision sometime from the SEC by next week. We'll see if they delay that decision, which they have done several times, or they come out with a straight no. If they approve it, no matter what they do, they say yes, there's going to be a big reaction. If they say no, there's going to be a big reaction. If they say not yet, there's going to be a big reaction. It's going to be fascinating to see which way it goes. For you guys out there that are in the crypto world, get ready, man, because this is a very, very, very big deal. Now, the thing about it is, once they get approval, once they approve these ETFs, I'm guessing it could take 6 months to a year before they're actually traded. There's going to have to be some rule writing. That's the biggest reason that this doesn't exist yet, is the SEC's fear. It's not like, Bitcoin is not like the stock market where there's regulations, the SEC, there's FINRA, and all these regulators on top of it. Bitcoin, as far as the SEC sees it, kind of the wild, wild west out there, pretty much unregulated. And you've seen the results of that with these failures and, people taking big losses. I had a client in my office today talking about he bought 10 Bitcoin way back in 2013. And lost like 8 of them right away on some exchange failure. So it's just, that's the SEC's fear, and that's what the crypto world's going to have to kind of tighten up before they're going to get these ETFs off. All right, so let's talk about news today. As you guys know, the big news we've been waiting for today was the non-farm payrolls report, also known as the jobs report. How many jobs did we create here in the United States in December? Well, the consensus was 160,000 jobs, with unemployment ticking up from 3.7% to 3.8%. That's what they were expecting today. The numbers come in. I was sitting up watching Bloomberg at 5:30 this morning. You guys would have laughed. I was zombified, but I wanted to see this number. Comes in at 216,000 jobs. Unemployment holds at 3.7%. Overall, the U.S. adds 2.7 million jobs in 2023, an average of about 225,000 jobs per month. Unemployment has now been below 4% for 25 consecutive months, for the first time since, I think, Kennedy or Lyndon Johnson was in office back in the 60s. So it's pretty amazing where we are with the jobs and wage growth. bummer. Here's where the Fed really going to have their conniption. Speeds up 4.1% for the year, an average of $34.27 per hour. That's a pretty nice number. That's the average hourly wage. What do you guys think about that? That seems a little bit high to me. I don't know a lot of people making $35 an hour. The people that I know that are making real money typically are not paid by the hour like that. So it's an interesting number that they came up with. And this is the hot button for the Fed. As you guys know, and I've been saying on the show, the Fed feels like wage gains for workers are inflationary. You know, workers make more money. They're going to spend that money. They're afraid that the competition for goods and services with that extra money is inflationary. I think that if I had a chance to talk to Powell, I could calm him down pretty quickly, because I would explain to him that that extra money, it's 4%, really. That money is being used on necessities, food, gasoline, power bills. That while they're not up, the Fed looks at this year, they're not up as much, inflation running, 3.5% or whatever the number is. They're not looking at the cumulative rise. The cumulative is what gets you. Food prices up 20%, man. So you can tell me the inflation rate's 3% all you want, but when I see the price of cream cheese up 25%, that's what I see. Anyway, I babble, forgive me. Fed feels like wages cause inflation. Now, this is in my mind. You know me, I'm not a big fan of the corporate world, as you guys know. I feel like it's kind of, I'm a capitalist. I don't want to be confused with any kind of socialist, communist. That's not what I'm about. But we can't have an unrestrained capitalist system where every dollar is allowed to be accumulated by just in the smallest groups. I was reading an article today. It was fascinating. They said they were having a big conniption in the 90s because the United States media world, newspapers, television, radio, interwebs, and everything of the whole media world was controlled by 20 companies. And they were talking about the concentration of the media, how it's horrible. It's going to lead to, basically they're going to have way too much influence over politics and policy, and on this went on what a negative it was to have that few companies controlling our media. Then it went on and said now, in 2023, we're down to five companies basically controlling everything in the media. Now that cannot be good news, guys, okay? Anyway, I babble though. What I'm feeling like is the Fed calling wages inflationary, that's just a convenient scapegoat for them to cover up their own blunders in massively overprinting money and flooding the world with dollars. And of course, this also has the added bonus for them of appeasing their corporate overlords who, as you know, would rather pay their workers, less, not more, right? Now, the problem here is this wage gain stuff could put a little bit of a cold blanket, or a wet blanket, I should say, on the stock market's expectations for rate cuts to start in March. March we're going to blink our eyes and March is going to be here. You really think that inflation will be low enough for the Fed to start cutting rates in just a couple of months? Because rate cuts will certainly be inflationary. You think the economy, I guess the economy is strong enough to handle higher rates. It certainly will be strong enough to handle rate cuts. It's just there's so many X factors going into all of this. You think rate cuts will slow wages from going up? You think rate cuts will slow job growth? I'd like to hear why, because I think it'll accelerate all of the things that the Fed is pointing at as causing inflation. So it's going to be fascinating to see it. It's going to be here before we know it. A couple little tidbits. Bitcoin, as we've been watching it, is now up 67% since September. That's quite a rally. House prices hitting a 9-month high. Now that was my big miss last year. I thought house prices would come down pretty dramatically. They did for a short time, peaking out at 460 here in Vegas, going all the way down to about 415, but now bouncing right back up to where they were. Now, the one thing I did not anticipate is that the super low interest rates would basically make people a prisoner of their own houses, where they can't or won't give up their 3% mortgage to sell the house and buy something else at a higher rate. I don't know how that goes away. You're going to have to see rates come down pretty dramatically to get anywhere close to where they were. I don't think we'll ever see that again, but I guess you should never say never, right? Fascinating times in real estate. Hopefully rates come down a little bit and we'll get a little bit of activity with first-time buyers, which is my market. Interesting story today too. Florida today becoming the first state to get FDA approval to import prescription drugs from Canada. Now I gotta say, guys, this doesn't make much sense in Chuck Barone world, because basically the way we're gonna do this is we're gonna manufacture the drugs here. We're gonna export those drugs to Canada. Then we're going to import them back here into the United States, right? And then we're going to sell those drugs, or Canada will import them and sell them to Florida. And this is supposedly going to save a whole bunch of money and lower prices for, Florida's going to start with the people who are wards of the state, prison population, and people who get meds free from the state. Then it'll move on to Social Security and the elderly. You really think that's going to lower prices? And how hard are we getting screwed if we can actually import those drugs to Canada, which somebody's making profit somewhere, then re-import those drugs back into the United States, somebody's making profit somewhere, sell them to Florida, and somehow it's still going to be less for Florida than they buying them directly here in the United States. I don't know. I'm going to have to see that to believe it. Of course, Big Pharma, our friends in Big Pharma, having a major shit fit about this, calling it, get this, guys, a reckless act by the FDA. Reckless. It's reckless for the FDA to import the medicines that are produced here in the United States, I guess. I'm sure their lobbyists will be out lobbying our Congress critters to try to stop this force the FDA to not do this. There's a whole bunch of other states in line to try this. They're desperate to try to save some money on pharmaceuticals they're paying for their Medicare recipients and for, the elderly in their state who are screaming bloody murder about the cost of prescriptions. It's going to be fascinating to see how this plays out. But one thing we can bet on is our greedy pharmaceutical companies. I guess if they see the writing on the wall, maybe they're going to lower prices a little bit here to just get rid of the threat of re-importing our drugs here. It's going to be fascinating. We'll keep you guys posted on that as well. Anyway, guys, that's it for the day. That's it for the week. Go forth. Have an awesome weekend. Enjoy some time with your friends and family. Finish off that New Year's hangover that I'm going to do and get ready to get back to the real world starting on Monday. We got the Bills, the late game on Sunday night, basically a playoff game against the Dolphins. Bills are going to win. Go Bills. Anyway, guys, that's it for the week. We appreciate your support. If you can, please hit the like button. It helps our algorithms around, gets our video in front of a few new people. Hit me up with questions and comments. Be back next week to bring you the news you need, guys. Until then, have a great weekend. Thanks.